Musk is Tesla, Tesla is Musk. And I think ultimately, right now, Tesla is the most undervalued AI play in the market. I mean, I believe the AI component of Tesla could be worth 1 to 2 trillion alone. And this, in my view, this is really the beginning of what is going to be just a massive stage of growth for Musk and Tesla. August 8th, in my opinion, will be a historical day for Tesla.
What about Tesla today? Reiterated outperform by Super Bowl Dan Ives at Wedbush. 275 is the price target. AI story, he says that Tesla's, quote, the linchpin to $1 trillion market cap, tide shifting. Do you think the tide is shifting?
Yeah, I would never go against Dan Ives, especially in a name like Tesla. I think the peak negativity that we saw around Tesla's earnings is not there anymore, but I think it's settling out. I think we're seeing a nice technical bottoming pattern. I wouldn't be surprised to see this above 200 in the very, very near future. I'm going to be trading this personally, probably with some options down the road here in the near future. But the AI story around it, I don't look at it just a car company. I think there's an AI story, there's potential software story, the charging station story. There's a lot of factors here that could power this thing over $200 in the very near term.
You would think to buy more, you say?
Yes. Yeah, I'm not there yet. There's maybe some broad market concerns, but maybe by the end of the month or around the 4th of July time.
All right.
Wedbush Securities Dan Ives recently said that Tesla stock is the most undervalued AI play in the entire market, and that the company's AI offerings, like Robotaxis and FSD, will be crucial in helping the EV maker reach a market cap of more than $1 trillion by 2025. As of the time of this video, Tesla's market cap is around $573 billion, so Ives is saying that Tesla will pretty much double. His price target on the stock is $275, implying an upside of 50% from current trading levels, and he even has a bull case price target, which is $350. But he admits that this figure is built around the success of FSD and autonomy, which could open the floodgates to higher stock prices. So, in today's video, we're going to talk about Dan Ives' most recent note on Tesla, and whether investors should follow his suit and load up on Tesla shares before it reaches a $1 trillion market cap again. But before we do that, if you want to keep up with Tesla's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
So you have Apple, you have Tesla. Those are both in the Magnificent Seven. You also have Oracle and Adobe as your names. So a lot of tech type of stocks in that group. Tell me a little bit about which ones do you think have the best potential for an upside move?
I think the best potential probably is Tesla, because it's been trading down for so long, and it's finally got the expected news that everybody thought, that Musk is going to get the pay package he wanted. And again, they're full on in Texas now. So I think it's good news for investors and good news for the stock, because the stock has been basing out for what feels like forever. And again, I'm not saying they're going to get up back to the highs again anytime soon. It's so far away from the last high that it had, which was several years ago. And the market's been so bullish. But Tesla, with the backdrop of a bullish market, has a long way to run. And I think that's very, very positive. I mean, and of course, Apple, too. Apple could get to 250 before you even know it. I mean, when you look at where we're going here into the holidays, in a couple of weeks, it's going to be July 4th. And then, boom, we come back from July 4th and it's earnings season. And then all these companies are going to report. And to think that they can't make 20, 30% jumps even in the next 30 to 45, 60 days, depending on when their earnings are setting up, they absolutely could. Remember, Tesla has to report, and I think that's in July. Same thing with Apple. So, I mean, here we are. We're almost at the end of June, and these things could continue because of earnings, not just because of the market.
In his new Tesla note, Dan Ives wrote, he expects that once Tesla officially gets through the final steps in the Twilight Zone Delaware legal spiderweb regarding Elon Musk's recently approved pay package, the company's board will have a new incentive-driven AI compensation package for Elon, which will get him to a 25% plus ownership of Tesla, while keeping all AI initiatives under the hood of the company. As for the company's near-term catalysts, Dan Ives chose the Robotaxi unveiling event, saying that it'll be a historical moment for Tesla. He wrote that Elon was very optimistic at the recent shareholder meeting around autonomous, new models coming, and it appears validation around Elon's strategic vision with FSD and Optimus is starting to take hold with some early positive signs. He added that the key to reaching a $1 trillion plus valuation is the autonomous and FSD vision taking hold for Tesla, which appears to be turning a corner with the latest FSD version 12.4 and now China FSD testing underway, reaffirming that Tesla is more of an AI and robotics play than a traditional car company. Wedbush Securities said that it has seen some signs of stabilization in pricing for the company over the last few months, with the bulk of the price cuts now likely in the rearview mirror. Also, demand in China is likely heating up, with consumers recognizing there would be no major price reductions ahead. Still, according to Dan Ives, competition from companies like BYD, NIO, and others remain very fierce in China, and for Tesla to see a global demand rebound, this will not happen without China. With all of this in mind, should investors take Ives's advice and buy more Tesla shares ahead of its near-term catalyst, the Robotaxi event? Let's find out. Hello, everyone, and welcome back to Investocracy.
All right, hard to fight the trend, but let's talk about your first trade that we're watching. Tesla under some pressure now after ticking a little bit higher earlier in the session. Tell us about it.
Absolutely. In the 180-ish area, which is where we're at right now, and it is a little bit lower, that is so super important. If it can maintain that, and I know we just ticked right below it, but if it can maintain that level in the near term, that is a bullish sign. You know, the run up to the decision about Elon Musk pay package, that's gone now. So now the stock needs to trade not only on its technicals, but its fundamentals. So if it can hold this 180 level, I really think Tesla has an opportunity to run back to 200, and in a pretty short time frame. You know, it could kind of be like an Nvidia and an Apple that we've seen that move recently. The stock needed a catalyst. This could be it. Now, as you know, traders have to do, I've got to talk about the other side of it also. If it can't hold this 180 here, boy, it's right back to the 50-day moving average. But I really think, though, this again, talking about trend, this has the potential to get back to that 200 level.
Many analysts and investors think that there are a lot of reasons to be bearish on Tesla stock. For example, the company's margins are shrinking and competition is intensifying. Additionally, not everyone agrees with Dan Ives on the stock being undervalued, as it trades at more than 45 times its trailing earnings. But there are even more reasons to be optimistic too. Tesla is a big name in the EV market, which could position it for success amid the industry's growth, despite cheaper options out there. The strong brand it has built up over the years could do for its higher-priced vehicles what Apple's brand has done for its premium-priced phones, which is to ensure that demand remains resilient even as competition increases. There's also the potential for interest rates to come down within the next year. Under more favorable economic conditions, consumer demand may strengthen, leading to better results for Tesla. Tesla's sales were down 9% for the first 3 months of 2024, totaling $21.3 billion. And while profits plunged by 55%, the company still posted a decent profit of $1.1 billion, which was a good 5% of revenue. It won't be an easy path for Tesla by any means, but with the stock down 30% this year, investors who are interested in buying more Tesla shares amid the dip should definitely take this opportunity. But this is just talking about Tesla's car business, without accounting for AI. So, let's get into why Tesla's AI prospects point to the fact that the stock is actually very undervalued. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Close to 90% of the value of Tesla could be attributed to robotaxis in 2029. This will totally transform the business model from essentially one-off vehicle sales with a little bit of software to a recurring revenue stream, and we think it'll have very attractive margins. Autonomous cars will not only change how you and I get around, they'll be so much safer, but they'll also be quite profitable to Tesla and very meaningful for shareholders.
So Tasha, by 2029, $2,600 a share, that's 4 years from now. From where we are now, I mean, a lot's going to have to happen, right? And I got to wonder, just in terms of scaling and also manufacturing, they have this new system that they, I think, tried to implement, right, which is more unibody, fewer parts, so faster, cheaper, et cetera. They've abandoned that, apparently. Is that going to affect rollout of robotaxis?
I think that the rollout of robotaxis is actually not dependent on the manufacturing of the next generation vehicle. I do think that the next generation vehicle will be used for the robotaxi platform, but they can turn their current fleet, Tesla's been saying this for a while, that they can turn their current fleet into robotaxis as well. So they could take cars coming off of lease. They removed the option to purchase, for instance, the Model 3 off of lease for that reason. I think so that they can seed their robotaxi network. So I think that this could be started in the next 1 to 2 years is our assumption. We already see robotaxis today from companies like Waymo, which is Google's effort. But it's happening at a very small scale. So I think that Tesla could be the first player to really bring this technology to scale.
According to ARK Invest, Tesla will launch its robotaxi service within the next 2 years. But if it ends up shelving this plan, then the investment's firm price target on the stock will be $350, significantly lower than their 2029 price target of $2,600. In the firm's expected value case, Tesla's vehicle production will increase 45% on an annual basis through 2029, after which it expects the company's ability to scale to depend on new factory openings. ARK explains that robotaxis are likely to ease manufacturing scaling by simplifying vehicle designs and by generating additional income from cash flow generative rides, and assumes that a majority of robotaxis will be sold to fleet owners, which would simplify Tesla's sales funnel. Finally, ARK Invest said that they expect Tesla's robotics business to have a minimal impact on its price target, but they still think that in the next decade, Tesla is likely to lead the robot manufacturing segment, as Optimus will begin completing useful factory tasks by the end of 2024. If Optimus can reduce labor hours by 10%, it could save the company $3 billion in manufacturing costs in 2029. However, the humanoid robots business could be a $24 trillion market at scale, providing Tesla with a generational opportunity to grow its revenue at an accelerated pace going forward. So, Tesla's massive opportunities with AI can't be denied, though a lot of it depends on the company's upcoming robotaxi event in August. If Tesla and Elon Musk manage to deliver on their promises, then the stock will definitely see a strong boost after the event, which means that now is the best time to buy more Tesla shares if you're interested in the stock. But what do you think about Tesla stock? Is it a buy at its current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Tesla is. If you would like to know what companies like Tesla have been up to these past few days, go ahead and click on the next video on your screen. See you there.